Good evening, ladies and gentlemen. This is Clueless Trading Frank, and this is supposedly the advanced coaching webinar for members at 8:19, or I should say 8:18 p.m. on a beautiful Monday evening here on the East Coast, and we don't have one single attendee, as they say in England, right? Participant on this session, which is actually great fodder and material for what I'm going to talk about tonight. This session is being recorded and will be uploaded on the YouTube Clueless Trading YouTube channel for others to view for free. So that's good, because given the fact that we have no attendance tonight, it could be the weather, it could be the despair, but I believe it's the volatility in the markets that causes the despair and the hopelessness, and the fact that at least I know some, and I know myself, are doing quite well navigating this type of treacherous market in between some very precision stuff that I've been showing. The majority are fearful, scared, and I believe hiding under the rocks. Whichever the case, it is absolutely perfect for what I consider to be for a retracement bounce, exactly the way that we saw in the past couple of weeks, where we had some horrible days where volatility kept people completely on the sidelines regardless of tactical charts that were being posted. And then came those $50 moves on Amazon and the $10 moves on Netflix and the $9 moves on Apple, which translate into anywhere from 200 to 400% return on the weekly calls. Yet I believe, in my opinion, and I hate saying this, very few took advantage of. I know some of you did, and I'm proud of you all. And the rest of you, I'm still proud of you, because you're still working on finding your amygdala. That's not a big word. Google it if you don't know what that means, which I post once in a while, because honestly speaking, life and trading, as I like to say, is not about looking for the perfect moment. The perfect moments come at the moment of maximum despair. And overall, not talking about the member community at the Clueless Trading Club, but in general, the overall sentiment is complete despair. So let's move on. Let me go straight into it, because I'll keep this short. And my wife's going to be happy. And my dogs are going to be happy. Because, hi, Exita. Because I'll have some breathing room tonight to go over this. Exita, I started off the session. You're obviously the sole attendant, which is a great sign overall, which is, well, you should listen to the first part of what I said, but you can listen to it on the recorded channel. Can you just mute your mic if you can? Okay. So it's a couple of behavioral dynamics of what's going on. One behavioral dynamic, which I find to be absolutely fascinating, which I talked about a few minutes ago, and I'll say it again, is the fact that the overall, and I'm not talking about tonight's attendance, it's a Monday evening, you know, it's a low volume market. People are probably out drinking and having dinner and having a good time, yet they're pissing on everything that's happening in the U.S. economy. Or it could be, my opinion, it's probably the lethargy and sort of the apathy. That's the exact word. The apathy that comes about when volatility takes control. Yet therein lies some of the biggest opportunities, as have kept on showing every single day, including today. And the fact is that that's just the way it is. So I love it. So I'm going to use that behavioral dynamic of a one attendance. Actually, we have two now. Tom, who are you? Okay, somebody called Tom just walked in. Two attendees in a webinar that I used to have maybe, anywhere from 8 to 12 or so, but that's good. Remember one thing about the markets: the lesser the participants, the bigger your opportunity to make money. The more the participants, there's more money coming in, and more stocks are getting overvalued at the wrong time or being chased. So the lesser the attendance at this webinar, the lesser the attendance in the stock markets, I can assure you that if you're opportunistic, you're going to make more money than you ever imagined. Or at least try to make more money than you ever imagined. Because trying is 80% of the game. Participating is 80% of the game. So Tom, may I ask who you are? I guess Tom will answer at his own time, but I shall move on. So I've shown some phenomenal charts today, and I mean it, phenomenal chart. I'm not talking Trump speak here. I'm not talking Clinton speak here. I'm talking real deal. I've shown some fantastic charts, and it's up to every one of you. It's your actually mandatory responsibility. If you're serious about not just navigating markets, but making about real money, not just chasing something for $2 kind of money, to review every single one of those charts. It's all in the Twitter feed. And I'm not talking about these bozos you're looking at. I'm talking about these type of charts that you're looking at. I'm going to keep on scrolling. Hey, Fairway Trader, how are you? Thanks, Tom.
Good. How are you?
I'm good, sir. I'm good. The first part of the thing, you can listen to it on when I upload the video cast. Anyway, let me move on. So I'm going to keep on scrolling down to show the enormous content that keeps on coming out, but one has to analyze it, move on it, and do whatever they need to do on it. This is not a simple business. It's a business where you have to capitalize on your profits when they come to you. You can be sitting around singing a tune, like as if you're walking, on a nice hike, with your dogs or whatever, and then, I'm going to come back and take my profits. It doesn't work like that. You have to manage your own profits, and you have to do what you need to do. Swing trades, some of the biggest money is made on swing trades. Tonight, I'm going to show why I don't think, could be wrong, but at least I'm honest enough to say it. I still believe that we are in a position to hit the 2070 and the 2080 level on the S&P 500 by the end of the week. I repeat, by the end of the week. Just the way I said it last week, and it happened. How many were in there from the beginning, from the lows? Very few. Very few. I know that. So the same story is being played out this week. So I'll show some technical setups that are in place, which doesn't mean they're going to work out. It simply means the probability is pretty damn good that I have the gumption and the courage to put in a reasonable sum of money, not go hog wild like some stupid traders do, not go hog wild, but to go out not on a limb, but a moderate amount in there with cash on the sidelines to take advantage of any pullbacks or any type of other opportunities that come by. And I believe that 2070 level will be hit purely because I am following technical discipline. Technical discipline is not something somebody can acquire after a couple of beers or a couple of glasses of wine or a nice scotch. It comes through hard work, pain, and suffering. It's almost like being a Catholic, right? Exactly. So the bottom line is you have to repent for your sins, and therein you shall be rewarded. Now, don't want to get into this evangelical, stuff, but the reality is trading is about some level of sacrifice over the short term, but keeping an eye on the price based on the technicals that are being presented in front of you. Every single one of these charts, whether it be from my iPhone, whether it be the pattern symmetry from last Monday, okay, till now. Is today Monday or Tuesday? Today's Monday. I called it Tuesday. I'm really losing track of time, okay? But anyway, see the pattern symmetry. Whether it be these type of technical patterns, the cloud cover as shown with Bollinger's, comments put out there, where the maximum open interest sits. So if you're a tactical player or an aggressive player or whatever you are, or a trader, you know where most of the money's betting on. You ever horse betted? You go with that. You can either short that strike price or you can go along with it. Patterns to walk people through these type of big moves, $5 moves, and then pull back and showing them that, okay, it's okay to buy down here. The box charts, which I think I'm going to be using far more often. I know I use it for myself, but I'll be using far more often so people have an idea that these shaded boxes, that's called the trading range, intraday trading range, just the way it held the box today. Regardless of the fact that many of you, and by the way, room was extremely silent today. I love it. I love serenity. That I don't have to respond to every single rapid fire question coming out of members. I had a good day. I'm down on a couple of positions on my second round. It's called being set up. It's called a trade setup. On a trade setup, you want to buy low. On big fat kaboom movers, the type of times, you want to sell while everybody's out there jamming the room and say, oh yeah, that's it, it's all going higher. Guys, many of you know me well. Some of you don't know me. And particularly, I don't really care. I care about certain people a lot. Okay? Like they say, I'm an equal opportunity lover. How about that? Okay? But honestly speaking, it just amazes me that behavioral game theory that I put together in my modeling for so many years never changes. And I love it because that shows me what the sentiment is. I don't need to look at investors in the AAII, American Association of Individual Investors. I need to look at Clueless 8 chat room indicator, Clueless 8 webinar indicator. And I know where the markets are going short term. So let me keep on scrolling down. Every single alert. Goldman Sachs. What a beautiful winner. I gave those calls at 40 some cents. I'll tell you where I gave them. Not at 43 cents at the bottom. That'll be some other frigging service lying to you. I gave them around 46, 47 cents. They went to 95 cents. Please do the math. That's 100+% on sub-dollar options. Who took advantage? I don't think many did. I don't think anyone did. Because if they did, there would be wowzers around the room, right? I'm not asking you to go out there and buy 100 contracts at 46 cents. That's $4,600. You could come up with 9,500. How about putting $460 and coming up with 950 and buying your significant other something, or your dog or your cat something else. I'm serious. Doesn't matter. So a beautiful play right off the bottom. The basing pattern that I showed. Price line right at the bottom. Picked it. Yes, it slipped went up $2 and then it slipped another two. Who gives a flying you know what? Because this is the basing pattern. Now if it breaks the red line, which I always put there, you bail. Short it. Because it's probably going to get down here. But in my opinion and my estimate based on what I'm seeing, this is a good buying opportunity. Everybody in the room chases price line when it's up $14. Who buys it when it's down 12 or down 25? I know some of you do, so I won't take that away from you guys. And sometimes I say stay away from it. But come on. Look at this chart. A beautiful channel. Yes, it's going to slip and slide and get down here. It's wake up time, guys, okay? Do what you need to do. I ain't grandma. So, another way I show it is a trading view chart. Gotta enlarge it. Look at this. This was earlier in the day, of course. This is an insight day. I even posted at the end of the day for the benefit of all members the same chart showing this candle right here. This is today, by the way. You got to squint your eyes to see it, or get a binocular or something, right? Or a magnifying glass, or wear grandma's reading glasses. I don't know. I wear reading glasses. So this was a little red, but it was still within the body of the previous candle, which was Friday. Nothing changed. And the best part is the vortex indicator right at the bottom was actually rising. But who wants to listen, right? That's called focus and discipline. Majority don't have it. Look, I'm not here to piss on people. I'm just here to show that there is something called discipline. The discipline of really looking at technicals and making a determination what to do based on what you see in front of you, not what your P&L looks like on one single day. If you keep on relying on your P&L every single day, and Tom knows this, okay, to determine what you're going to make for the week, you will always, guaranteed, never use that word, but I'd like to use it right now, guaranteed, come out a loser. You cannot looking at your P&L every hour, every day, regardless of the chart setups in front of you. Look at this beautiful picture of the Russell 2000. A rising wedge, a consolidation channel. Did that picture completely change at the end of the day? If it did, I'm a straight up guy. I'll tell you, I'm not in the business of putting people in harm's way. I'm in the business of keeping people solid, keeping myself solid. Is it easy? No. But easy doesn't make the real money. How many times have I told myself that? I keep on telling all of you that. Some of you actually take it to heart and really go into the grind. And many of you just basically panic every single time the market twists a turn. And we were down 8 points on the Dow Jones Industrial Average after being up 60-some points or so on Friday. So how about looking at it very simply? We're up 65 points and we gave back 8 points. Yes, individual stocks can be more volatile, but therein lies the opportunity. Rising wedge. Nice consolidation channel. What did it look like at the end of the day? I believe I did post it. I'm going to go back to it in a second. Another little. Oh, this was the move on Goldman Sachs right at the bottom. I picked it pretty much at the bottom, give or take 20 cents. 153.74 was the bottom. I picked it around 154 and change, low change. Stock went to 156.09. Options went from 43 cents, which I didn't recommend the 43 cents because I was waiting for a little confirmation in my own way. At around 46, 47 cents, they went to 95 cents. End of story. Another beautiful chart. The tactical view of the SPY. Nothing changed on this picture. I even pointed out no volume. I don't know how easy I can make. I still hear some people say your charts are really hard to read. Oh Lord, is that what you told your, on 12th grade to your math teacher and said, oh my God, I still don't get it after they've been trying to teach you since 7th grade? I mean, seriously, it's wake up time, okay? So I make it real simple. I said no volume. Is there any, there's no volume. And the market basically retraced a little bit. What does that tell you? Positive divergences are still in place. It's a good setup. Does that mean that it's a surefire guarantee that we're going to be up tomorrow and the day after and the day after? No. It simply means the probabilities are higher for a retracement bounce and a continuation of a certain level, not up here, but up to the upper end of the channel, which I clearly described on the pre-market videocast, which I take enough time in the morning to do. And that's a decent sum of money. Now, I know some of you don't really care about it. Maybe some of you are billionaires and multimillionaires and you don't care if the market goes this way or that. You always want perfect things. Well, I'm not. I'm somebody who has to pay my bills. I have debts to pay. And I remain humble every single minute of the day. So I don't know what to say. Some of you don't need to work hard. You guys do it, you got a paycheck coming, or you work for the government, so you got a fat paycheck coming, you got your pension set up and you got your medicals bill paid for thanks to the government. Well, this ain't no welfare community here. This is hard work and independent. I write my own checks. Maybe that's why I'm so passionate about what I do. Think about that for a minute. Couple of very powerful headlines. And this one, look at this baby. You could have made more than 10% on your money on Gap alone since I did the earnings alert. Picture of the IWM. The box chart again. SRPT. Oh, really scary because I bought it all the way down at 15, 16. And in fact, I posted I bought it all the way down when it fell because I had common shares. So I bought it at the lows, and that was around 10. Stock went to 20 and change and pre-marketed 23 a couple of days ago. So this bar is really bad. You listen on stock tweets, they're like, oh my God, they're all pundits. They're all biotech, specialists, research scientists. That's the reason why they're posting on stock tweets. Last I checked, any what should I say, renowned biotech specialist or researcher is not posting on stock tweets. I'm just following the charts. What the heck do I know? I've said it before with Sarepta Therapeutics, either hero or zero. Got to play with the small amount. If you're not ready to take risks, don't trade. Don't invest. Don't do this. Don't listen to me. Actually, don't listen to me anyway. But the point is, this big red candle, what's happening after hours? Can somebody tell me? Does anyone know what's happening with SRPT after hours? It's up more than $1.
Climbing back up. Yeah.
Absolutely. Because it hit the bottom end of the channel, Tom, and it's bouncing. Now, I don't know whether or not they're going to get FDA approval. If I knew that, I'd put my meager $8,000 in savings and say, okay, let's do it. All right, all kidding aside, it's a gamble. But all I know is one thing. They're a real company. The technicals seem to be acting well. Because whoever bought the stock all the way down from 9 and drove it up to 21, I bought bits and pieces along the way. That's big money. Because they know that the advisory committee said, and that was a 6-7 decision. That's almost close like the frigging elections coming up. Okay? that, okay, we're not going to fully approve you. We're going to send it over to the actual FDA decision committee, which is on the 26th. So I don't know what's going to happen on the 26th. I've said that before. But I know if it happens, and I'm willing to bet some risk money, either the stock's going to go to 40 or it's going to go to 10. So that's the way it works. I mean, this is, it's a speculative tactical trade. But from a technical standpoint, what I like is the way it's trading. It's trading actually within not a random fashion, like a random inner voices in every trader's heads. It's trading in a tactical fashion, which I like. It hit the bottom. It's up $1. I showed it. Somewhere up here is my SRPT chart saying buy after it pulled back. This is a beautiful chart. It's a pinch Bollinger. What's so hard to understand it? What I need from my members and my traders is to make their own decisions, which I know many do, but to also have an open mind and a focused mind to understand what I'm putting across. Who frigging draws charts like this? Am I the best out there? Absolutely not. But I'm pretty damn good when it comes to forecasting. To me, this completely looks like a left shoulder, a right shoulder, which happens to be the bottom of this pinch Bollinger right there. And right there, here's your head. That's an inverse head and shoulder. Look, let me just remind everyone about this. If we were robots, I know I'm more robotic than most of you guys, okay? You would look at every pattern and you act on it. I can assure you, if you backtest technical patterns that I've shown in very difficult markets, you would be almost 100% richer than what you are right now. And that is a fact. That is a fact. I'm not in the business of forcing you to do it. That's your wife's job, or your husband's job, or your partner's job. I don't know. But I can assure you, and I've backtested my trades, that the way I draw my charts, every single, these dotted line channels and this and that, just showing you one of them. If you were a tactical trader and truly followed discipline through difficult times, and I'm not talking about looking, glancing into your P&L every 2 hours at the end of the day, like, oh my God, I got to sell out, this and that. You would be up so big that your confidence would be so large that you truly would become close to a robotic trader. But that's the beauty of life. All of you are not even close to it, despite everything that I've shown. But here's the silver lining. The fact that you guys are not even close to it, guys and girls, of course, that you have hope to someday become a mechanical trader. Despite my charts and my algo HFT stuff and stuff, I am not going to be right every minute, every hour, every 2 days. But boy, am I going to be right overall. So therein lies the value-added service, or the VAS, that I deliver on this service. So here's Apple. This is an Apple daily chart, for God's sake. I mean, what more could you ask for? Who the hell cares if it pulls back 50 cents? Look at this trend. I even point out, Apple is going to go to 105. Whether it happens I don't think it's going to happen in 2 days, but whether it happens in 5 days or a week or It's going to happen quicker than that. Look at this chart. Look at this. I mean, these arrows literally are meant to walk people through heavy duty technical analysis so they don't have to think, because our beautiful nation, as I like to tell my kid, he drives. Okay, he's got a driving license, so he drives himself to school. So I said, listen, you're going to dumb yourself down. Remember the days I drove you to school? And we talked about, we listened to Bloomberg radio and I explained to you some of the concepts. And he just rolled his eyes. I said, frigging don't dumb yourself down. Listen to it on your own. Well, we are a dumbed down nation. That's what we are. It's a fact. So don't dumb yourself down, all right? Look at these things and make up your mind. This is a phenomenal thing. Worst case scenario, the stock intersects 99.85 right here, the mid-Bollinger. That's $3 from here. What happened to Apple calls last time? Went from 65 cents to frigging $4.50. Can I truthfully ask people to give me a real answer if they did that? They could have bought 100 contracts at 65, which would be $6,500, and taken out 45,000. I repeat, they could have put, and this is just one example, not to mention Priceline, not to mention Netflix, not to mention Amazon, but let me just talk about good old Apple. When I proposed the calls, I believe they were the 93.5s. Okay, they were around 65 to 80 cents because they were called lottos. Okay, now am I saying, okay, that's it, everyone's going down buying like 8,000? No, but let me tell you what happened. You do what you need to do, but $6,500, or let's say $650, and if you can't risk $650, don't do this. Okay, went to $4.25. That, ladies and gentlemen, is $42,500. What makes a trader do that? Conviction. Or 650 went to 4,250. This is one example. I have shown multiple examples on Amazon, which was humongous. It's called the conviction of sticking to a trade based on the patterns that they're seeing, not based on the intraday back and forth, listening to stock twits, CNBC, some real bears out there, or even here, like, oh my God, it's all over, bye-bye, all kinds of real technical terms, and completely losing sight of where we're going. Just the way a majority of you, with all due respect, are losing sight of what is going on in the market. And I'm showing some real tactical charts. I'm not just throwing out some charts out there and say, okay, good luck, see it. So 650 goes to 4,250. 6,500 goes to 42,500. Now, what is it going to be an easy trade? Absolutely not. Because along the way, there's enough zigs and zags. Easy, it is not. The volatility moves while before it goes higher are intense. But when you look back at it on a weekly, for example, this is a weekly chart. I'm sure you guys have seen this chart. It's defined. So if you're going to do a swing for a couple of weeks going into June, Well, stick to the frigging trade. And if the stock pulls back, and remember, you have eyes. God has given you eyes. So you know the pattern. It's like this. So what if it slips down? When does the pattern break? When it breaks below the 95 level. Then the pattern doesn't look like it's going to go higher, right? So that's when you let go. But as long as it stays around this level, it zigzags around a little bit more and keeps on climbing and hits the 50-week moving average, 105. Wow. By that time, CNBC is probably going to be doing some, they're going to be doing the flash dance, right? Oh, Apple's at 105. Oh, the world has changed, Don't listen to the garbage. All I'm simply saying is if you are seeing the pattern, let me get all these lines off. Don't forget this, okay? Because this has happened multiple times, and you guys haven't been there. And I'm not going to lie and say I've been there all the time, but I've been there a good, decent amount. So when you're seeing a pattern like this, off the bottom, stochastics rising, the slow stochastics on the weekly are about to cross over. How powerful is that? It's like your wife or your husband telling you, honey, you're really getting fit. You know it's a lie, but looks like you might be getting fit because you're eating less and you're going to gym more. I mean, that applies to me. So that's the weekly stochastics turning around. Because instead of going to the gym 1 day a week, you're maybe going 3 days a week. Now, this is not a joke. I'm telling you, drawing a real life analogy. So all of a sudden, you're seeing the difference. You're starting to get a 3-pack. Forget a 6-pack. Well, this is the 3-pack that's taking place right here in Apple right now. Now, all that goes bust if we break below, if we break below, let's say the 90 level or so, or the 93 level. If it turns down, then that means you're starting to eat your burgers again and cheating on your 3 days at the gym. You're eating the fat burgers. Could I draw a burger? Okay, that's a burger. Okay. Jeez, I really need some artistic help here. So that's a burger, okay? So you're starting to eat your fat burgers on the side and shoving the fries. So what happens? The chart breaks. No more 3-packs. You're down to minus 2-packs. All right? But that would be a fundamental change in the chart symmetry. But that's not what's happening right now. And I showed this chart specifically so that people can have the gumption and the strength to stay in a trade. Listen, it's not that you don't get into the right entry points. I show the right entry points. The worst thing is always selling early. I don't need to ask anyone that. I know it. So I showed this, Regeneron, the box chart again, Goldman Sachs right off the bottom, showing the big swing charts. On and on and on. Okay? Apple. Apple is going to go to $100. How many of you guys are going to enjoy that ride where $1 calls goes to 400% on your money? I would like a lot of you to do that. But in order to do that, you need to be strong. Question is, are you strong? And I'm not pissing on anyone. I'm telling the truth. 99% of traders are weak morsels. They are. They're weak. And they keep on making excuses. I said Sarepta, possible range breakout. It sure was a range breakout. And what do range breakouts do? They pull back and retest. It range broke out to $20.14, right up here. I called the shot on this stock at around 15, again around 17. I don't need to apologize to anyone. So let's move on. Let me get this thing out. So that's my real-time Twitter feed. If you don't know how to utilize it, well, I can help you. So let's talk about this chart here, which is a really technical chart. It is actually. But given all the time and effort that I put in there to explain to people what it is, and this being a free session that I'm going to put out there at my own time, because I'm Bernie Sanders. Oh, God. Somebody just hit me on the head, okay? So the thing is that was a joke, by the way. So try to listen to what I'm saying, all right? So I do these shaded patterns, not because they look good. Okay? This is not some ET show going on here, okay? Extraterrestrial mysterious objects appearing in the sky, all right? This is things that I identify. This is the reason why you pay me some small amount of money every month for understanding things that you would never see on your own. So ladies and gentlemen, I put this through on my charts on the Twitter feed, so match them. These are volatility clusters, okay? Both of them. Look how similar it is. Now, remember one thing about charts, and listen carefully what I'm going to say. Chart reading is, I would say, 40% art, 60%, I would say 40% art, like an artist viewing a painting, 40% pure technicals, and 20% pure gut feeling. That's something I can teach you. That's something you learn on your own. But the 40% overlap between technicals, which is science, and art, is something that I'm showing people. So let's say, for example, you knew nothing about technical analysis, and you looked at this. And I know I have a, huge attendance here. I'm just kidding. But makes my life easier, by the way. Because I have two of my favorite people in here, Tom Halson and Exita, swimming the always learning. So I'm happy. Do you guys see the similarity, what's going on here in these two volatility clusters? I need some responses.
Yes, I do.
You do, right? Exita?
Yes.
You do, right? Now, in the middle of the trading day, to identify this type of volatility cluster, it's like staring at the sky. One of my passions when I was a kid growing up was astronomy, gazing at the stars. I should know a lot of the names of the stars before my brain got fried. Just kidding. But so you look at the on a clear night, you look at the sky and you can actually see patterns. Now, hopefully you're not chewing on things or smoking stuff that you can see the patterns that clearly. But let's say, for example, you're standing there having a glass of wine and looking out there. You see patterns. Well, looking at charts is exactly the same thing. I stare at charts like for hours at times. Why? Because I'm a complete nerd and I have no life? No, because I think it's going to make my life a little bit better if I can make a little bit more money for my family and what I do. And the satisfaction of knowing that I'm learning my craft better. Well, here it is. So when you look at a volatility cluster like that, is it supposed to be like a straight line up? Like, okay, we started the day here, we're going to end up here. No, it goes like this, but it's within a certain trading band, which I've shown clearly at the beginning of the day, because I kind of assume that's what it's going to do. And most of the time, and both of you know this, and many of you know this who are listening to this, that it's correct. So while it's doing this chop fest, and then I'm going to move on to the next chart, the box charts that I put out there, which I believe you, all of you find very helpful. Okay, you know the shaded boxes, right? You did find it helpful, right?
Yes.
Because I think that's basically highlighting what the trading band is for the day. So anyway, so when you have this type of thing, what's there to be so freaked out about? Because did we drop out of this? Tom says, like Uranus, okay? Cut it out, Tom, okay? But just kidding. Just kidding. All right, so the point is, so did we just completely drop out and do here? Did we, are we oversold? Am I showing like that 1 hour stows, which have worked like tremendous magic if we have the cojones or I should say the fortitude, okay, with respect to everyone else, to hold? Look at these. Let me pull this out so you can see it. Look at the 1 hour chart. All it did was simply got oversold by 4 o'clock. Okay, by 4 o'clock. Right there, by 4 o'clock we got oversold. Isn't it lovely that the market basically grinded its way down and decided to get oversold exactly at 3 o'clock, actually, at 3 p.m. But stayed within these blobs of clustered volatility with the 50 and the, show this again, sorry, hold on. Oh, that's better. Okay, pull this down. Sorry, hold on. There you go. And basically pull us, stay within the range that I showed, and the 50 and the 30, 40, the 5 minutes doesn't really matter. So let me look at the hourly chart. Okay, with the 50 and the 34-day moving average, and that's called real chart reading. That's like really going to the Met or the Museum of Modern Art or the Whitney Museum or whatever museum you go to, and really looking at that artwork and say, okay, I see what's going on. Well, get to see what's going on because I'm actually walking you guys through it. So nothing changed today. Nothing technically changed. Is it going to change tomorrow morning? I have no freaking idea. But I'm telling you what I'm seeing in front of me, and I'm placing a bet. That's called trading. You place a high probability bet. So here we are. You look at the orange line, the 34 and the 50. It's still moving up. So who gives a flying whatever what the markets do all through the day? So the SPX calls, which went from $6 to $8 and then ended at $5 by the end of the day, it doesn't matter. Does it matter to your P&L? Yes, it does. Because you have a bunch of them, it doesn't feel good. But what about what's feeling good? So here's the most important line I'm going to say for tonight. Feeling good on a certain day has no bearing how much frigging money you're going to make by the end of the week. And if you look back at yourself, you know exactly what I'm talking about. Feeling good about a certain day or 2 days has no bearing as long as the technical setup is in place. as to how much money you're going to make, and whether those calls are going to go from 6 to 16 to 18 to 22. Has it not happened? I've shown it hundreds of times. Have I personally made the mistake of selling out early, taking some decent profits, and seeing monster, obscene profits being left on the table? Yes, it's happened to me. I won't lie. So I am myself fighting that urge to take decent profits to make obscene profits. How about going into the obscene stage once in a while, okay? Where you have 8 contracts, let's say at 3 or 4, and they go to 24. You know I've shown that. Well, how about getting there? I'll say one word, no offense meant to anyone, and it's, it's like I said, I'm exercising my right of free speech. It's financial porn. When you go from 4 to 25 to 30. Now, this can happen on the long side and the short side. So how about participating in that act of financial, what I just said? All right? Because after that, you are a star. So saying all that, this is what happened today. It freaked a lot of people out because there was, because everything was like moving sideways, and that's called a sideways basing pattern. That's a sideways basing pattern. Bucked up straight. Everyone got excited. Oh my God, we're going higher. Well, it was great because Tesla, generated what? Almost like 200% return on those calls. And then all day long, it did this. Yet, the underlying dynamics of the market, the moving averages, nothing changed. Now, this is a 1-hour chart. And look what happened underneath. To me, that's positive. Don't be the rocket scientist to figure this out. By the end of the day, including now, the crossover is intact. We went deep oversold at around 3 o'clock, 4 o'clock, 4 o'clock exactly, on the E-minis, which are slightly different than the S&P 500, obviously. Like I said, the backstage kabuki theater, that's where the actors change their robes. That's your E-minis. And look where we are. Somewhere along the line, we're getting overbought. It could happen as early as when you open your nice sleepy eyes at 7 in the morning. In my case, I wake up at 4:35 just to check this frigging futures. Okay, what's happening in Europe? Or it could, I hope it doesn't get completely overbought first thing in the morning, which would be nice because I'll sell my calls, but which would be bad because that means we'll have another reset before we move further. So this is what I'm getting at. I mean, that's it. And all these charts are there for everyone to see. Look at the chart of the 1-hour chart of good old Russell 2000. The same chop is going on. Do the drawings. Do the oval. 1 second. Let me show you that I'm actually a real artist. Do I qualify as Andy Warhol here or what? Okay, 1 second. Trying to get it out here. And guys, just do it once in a while. Grab a couple of drinks and just sit there and draw charts. And believe me, you're going to be far better than I am. Look what happened on the 1-hour chart on the TFs. And I've shown multiple reasoning why it's still intact, other than the fact that it's still a massive head and shoulder. Inverse head and shoulder. Big one. Here's your head, multiple heads. Call this the left shoulder. We could even come down to create the right shoulder. Yet we can still get up to this, which we almost did, actually. 1120 level, but this is a short-term picture. So look at this. Now this is a lot more choppier than S&P because the Russell 2000, just the way the name connotates, has 2,000 stocks which are in the small cap arena. They include oil companies, they include biotechs, and they include a slew of other types of companies. So obviously they're more choppy. So what? Russell 2000 calls went from $2 to $11 last week. Ladies and gentlemen, I don't need to remind you because it's all posted. I sold them mostly around 7 or 8, and I saw them go to 11 plus. So I just don't know what to say anymore. All right? I'm talking about you guys, not about the Russell 2000, okay? So wake up time. So nothing changed here. So if you're truly technically disciplined, then you say, you know what? Okay. I'm sticking to the trade because nothing changed. Nothing did change. So let me broaden this out. Yeah, there was a big sell program that came in at 3 o'clock. Blah, blah, blah. Who cares? Look what's happening to the internals. Deep oversold. What happened the last time it got oversold? At this level. Look at this. The Russell 2000 went from roughly 1085 or 1080 over the following 48 hours went to 1115. Can somebody tell me what the returns on those weekly calls were over those 48 hours? Please, take a guess. And this is not an exercise in knowing how intelligent you are. This is an exercise in helping all of you try to make some real frigging money. So what do you think when the Russell 2000 went from roughly 1180
400%.
I'm sorry, 1082 to, which I did call, okay, to 1120. And now I'm calling for a move up to 1130 based on the other longer term charts. So your answer, Tom, was 400%, correct?
Yeah.
Okay. Exita? Always learning. You still there? Okay. Time out. Your time passed. Okay. Tom's right. It's probably 400, if not more. So let's say you put $1,000 investment. Real math says it didn't go to 4,000. It went to $3,000. Let's say you are a more, there's a heavy pocket player. Put in 10,000. Said that's it. I'm finally going to buy my wife, what I promised her. It went to 30,000. Somewhere in the middle, somebody bought, let's say, sorry, that should be 10,000. So somebody bought, let's say, 5,000, said, I'm going to bet with 5,000 because these technicals are great and clueless charts have been correct so many times, blah, blah, blah. Went to 15,000. Guys, I'm tired. No, I mean it. I'm tired. How many times are you going to keep on leaving money on the table all the time? 5,000 to 15,000 in 48 hours on a real technical move? This is not the first time. Look at the internals. Look. Robots don't care about money because they can't count money. They just look at numbers. They don't care if 10,000 goes to 30,000. Algos are just about numbers, about technicals, about looking at where we are. Look at the 50. Look at the 34. The 50 and the 34 were moving sideways here. They didn't even look as good as they do here. Of course, that was a true buying opportunity. And I've said 1080 was a level that they bounced from, and it's still intact. Look. Let me just draw this out now. Let me get it in. 1 second. Look, sometimes, this is what I do to myself too. Okay, sometimes you gotta really beat yourself up and say, why don't you make 100,000 a month of this business? Especially when you're getting this type of tactical precision. And honestly, just beat yourself up once in a while. Because if you don't, you will never make the real money. Look, I beat myself up, okay? Mentally we're talking about. I'm not talking about taking a chain and beating yourself up. This is not 90 Shades of Grey going on here, okay? So the point is that when you look at these type of patterns, is it not possible that it does this? Of course it is, because I've shown enough charts to show that it probably will. Is it possible that these lines completely break down? And of course we know that's possible too. But for that, we're prepared to go on the short side rather quickly. But I don't know what to say. All right, you know what I'm saying. So when you take 5,000 to 15,000, if not more. In fact, it was more, Tom. And you don't even make 1,000 of that for yourself. You really have to beat yourself up mentally. And this is what's happening with the markets over and over and over again. I can't change behavioral habits. I can't change fear. I can't change what you go through every single morning when you wake up and you do a trade and like, oh my God, I was up so much and I didn't take the profits. Well, I can't change all that because I'm trying to just give you the guidelines, what you need to do. Look at the box charts, which I'm going to use to finish off this session. Did anything change with the box? No. Did you buy the bottom of the box? Probably no. The uptrend line is here. Let me make this almost a little bit bigger. Hold on. The 50, this is 34-day moving average. I live in, I don't live and die by it, but I use them as a guideline. 34, 50 moving averages, gapping up. Look at the, it's like a gaping mouth. And if you're a fisherman, you know what a gaping mouth looks like on a big fish that you caught before you kill it. I'm just kidding. But anyway, so look where we are. 1 hour charts, the trader's friend, oversold. Is it possible we wake up in the morning and everything, all hell goes in a handbasket and we're down here? Sure it is. But if we're going to live by thinking we're going to wake up every morning to die, then that's the way you trade. Well, I don't trade like that. I look at the technicals that's out there and I go by what I think is a higher probability trade. The higher probability trade is we come out of this box and test the 1119 level. In the meantime, is it possible that we test 1103? Sure. Did anything change in the box on the S&P 500? This is the E-minis. Look at this. It's a defined box, but every little twist and turn, and by the way, the internals are looking solid, but every little twist and turn, there was fear, there was apprehension, and there's nothing wrong with it. But there was pure terrifying, I'm not going to act on anything till I see something. What are you guys all waiting to see? You waiting to see a green flag that the market's going to hire just the way last week it raised the green flag? No. Did Amazon raise a green flag when it was down at $640, $630, and I said buy? No. Did you take a call at $5, $6 that went to 44? Yeah, you did take a call at $5, $6. You probably sold at 8. So keep on learning from your own mistakes. I do, because I'm sick and tired of not really performing to the level I should be performing at. And if you all don't think that you need to challenge yourself to do that, then honestly speaking, don't take me the wrong way, and I'm saying that as friends, you're all losers. Because if you cannot challenge yourself to do your best and keep on not missing huge opportunities. I can assure you, because I know this for myself, that you have lost more money by not staying in tactical trades despite everything I've shown than selling out on certain times before things have gone down. You have lost more money by not holding something, in simple English, than by selling things during a sell-off. And if you add up all the money that you have not made by not sticking and being focused and disciplined on holding a trade from point A to point Z, well, no one goes from point A to point Z. You can still sell on the upper end of the range. Let's say you sell at like T. And all of you have done the mistake so many times, it should honestly make you throw up. Because sometimes it makes me throw up that I don't really completely hold from A to Z on my own tactical charts that I put out there. Look at price line. I showed price line off the bottom. Let me just okay, this is the stick chart. Off the bottom here, when it fell, if you all remember, 1200, it took about 9 days and the stock went to 100 points higher. $4 calls went to almost 36. Was I there at 36? No, because I'm not some bullshit service that's going to lie to you. I sold along the way, and I did sell my last very few in the high 20s and 36. Did that feel good? Yes, because I proved to myself that I can do it. And if at this stage of my trading career, I'm still proving myself and learning, well, you all really need to wake up. So kick yourself in the butt and honestly, stop being so frigging scared all the time. I'm scared sometimes, but I do know one thing. This market wants to go higher for now. The real crash is coming in the fall, and it's going to come when everyone's happy. But this is not the time to be super scared, because I'm not asking for the market to make new highs. I'm simply saying tactical highs. 12 S&P 2070, 2080, possibly 2090. Who knows? So price line down here, does it look like a buy? Can I ask if any of you bought? And this is just a rhetorical question for the purpose of the session. Tom, did you buy price line?
No, but I have it on my radar for tomorrow morning.
Okay. Okay, that's good. So price line basically is something just from a tactical standpoint. Forget about like, and Tom, you've been with me long enough to know what tactical trades are. So this is what I'm looking at. Yes, it can slip a little bit more. It can slip maybe 4 or 5 points. But I do know that even a back test of this channel is 1266. $4 calls, you'll take out at $16. Don't miss it. Now, if it breaks the 1230 level, different story. At that point, we are basically looking at the 1206, 1210. That's tactical trading. So for the sake of everyone else, and Tom, thanks for responding, this is what we do. It's all about tactical trading. Yes, I do long-term stuff. Obviously, I do. But I can't give you a fake, lying, long-term view in a volatile market that's moving on every single news event that's happening out there, overseas as well as domestic. So I'm not going to lie to you on that. And services which do that, God bless them. They're all geniuses. And they're all frigging wrong when it comes to forecasts, especially of tactical bottoms. And at tactical highs, they're all excited. Or they're all uber dogmatic at tactical highs. If Priceline does what it does, it's going to complete this W pattern. It's as simple as that, just the way it did last time. And that's 1308. Are you going to miss this trade again? And I'm not talking to you, Tom. I'm talking in general. So this is what I'm getting at, ladies and gentlemen, okay? I'm not asking people to just throw out the money and do what they need to do. In fact, I'm not asking people to do anything. I want to say something very, very honestly and clearly tonight. I have a choice not to do this service because I do put in a lot of blood, sweat, and tears to help people. I'm sitting here at 9:25 in the evening, whatever the time is, 9:28, trying to change people's behavioral dynamics. Who the hell does that? We have had a bunch of people, a few, leave because they can't handle the volatility. It's not that they can't handle the volatility. They can't handle the shame of telling themselves they were stupid for not focusing and being disciplined on the stuff that I'm showing and participating in them, even if it's for 5 hours or for 5 days and not necessarily for 5 weeks. But because they can't tell themselves that, they blame everything else and they say, oh, I'm going to take a break. Well, good for them. So this is the honest truth that I'm telling everyone. The lesser I see interest in the market, which is being shown across the board from Bank of America's research, which I put out there, showing that the unbelievably few investors, traders, and stuff are involved in the market, the more excited I get. Now, I'm not stupid. I'm not going to get super excited about the market if every single metric that comes out is horrible. But I do know one thing from my experience, which you all have no idea about, is when you have massive liquidity pumps from every single central bank who are hell-bent on making sure that the global economy is functioning, which is their job. If you're a parent, you're going to make sure that whatever it takes, it doesn't matter if your child is ill-behaved or does something stupid or whatever. What do? You take your child and throw them out the window? No, you make sure that whatever it takes, you're going to remedy the situation. Yes, sometimes it's called making your kids spoiled. But you know what? Between discipline and love is what you do to nurture your family. Well, the frigging central banks of the world, whatever they are, they're not out to kill every economy that they're nurturing. Because their job is to make sure, right or wrong, I'm not debating that part, that the economies stay afloat. Now, every single trader, and when you look at stock tweets, is a frigging central banker, like I said, right? They all think that the premier of China, that they're running a country. Frigging guys don't even understand the basics of macroeconomics. My son knows more about macroeconomics than most traders that I've dealt with. So the point is that that's just the way it is. So when you have a situation like that, you don't get massive collapses. Yes, you get corrections and you get all this. I show every technical level, both on the downside and the upside. So far, this is a chart of the Russell 2000, which I've shown multiple times. To me, look at this. I'm a simple guy. Believe me, I'm not some phenomenal, like, I'm going to show you wave 1, 2, 3, minute subdivisions and this and that, all that stuff. And good for them, the guys who do it. Let them be rocket scientists. I hope they have a life. The bottom line is, this is what I'm looking at. Okay? I'm saying we're going to 1128, 1130, maximum 1144. Who cares? Do you know what 11:15, where we closed at 11:11 to 11:30 means? Which we already did 2 weeks ago, a week ago. They mean 300%, 400% on buying calls at $1. And if people say, oh, I can't do that, forget it. So here's the God honest truth. I'm doing a lot to show people, including tonight, of what's going on. I am not a raging bull. I'm a tactical trader. I'm certainly not a raging bear at this point. I'm going to be a raging bear when everybody is too happy. I don't see any happiness anywhere, whether it be in all the different reports that I read, whether it be in the chat room, whether it be in the attendance of 2 people at this webinar. There is no interest in the stock market, and I love it. Now, why? Because I've seen that from 1996 onward with my clients who always sold at the bottom, who never bought when the markets were cheap, never bought when the markets were moving higher, and certainly many of them never bought when the markets were breaking out, because the simple mantra was, oh, it's too high. Just the way Amazon was too high at $600, right? From 400. And then it goes to 700 plus and still moving higher. So it's always like that in the head. So I can't change people's mind anymore. That's what exhausts me. That I try so hard to put in 2 cents of real logic in people's head. But if people are not logical, I can't help it. I'm following charts. If charts don't look right, I will say short. If charts look right, I will say go long. It's really as simple as that. This to me on an internal basis is looking right. Up to a certain level. I am not saying we're going to go up to 1200 on the Russell 2000. I'm simply saying the tactical moves mean a lot of money in your pocket. If you know, not if you know, if you actually do it. Now, if we break within the channel and we break 1088, it's obvious that we're going to go to 1056. So I'm not going to be sitting here and saying buy, buy, buy. Or if we break into the channel hard and cross 1090, let's say on the Russell 2000, I'm never going to guide people in the wrong direction. Yes, I might be wrong for an hour or two or a day or two. But the rewards come for the ones who persevere, not for the ones who are lazy and meek. And that's not from the 2nd Corinthians, okay? Or as Donald Trump said, Corinthian number 2. I actually read the 2nd Corinthians at my friend's wedding. So that's what I'm getting at. Okay? So that's it. I'm going to end the session tonight with that statement. Last thing I'm going to show you all is, 1 second please, S&P 500. Not that one. Look at this chart. You can actually show your kid this chart and say, Mommy, it's so pretty. Or Daddy, this is so cute. What is that, a store? I call it a galloping horse pattern. I used to call that. I used to be a pretty crazy trader. Crazy meaning like big. I used to have big positions. I don't anymore. I get good positions. Maybe I should act like one of those services out there which say, oh, I took 2,000 and made it 30,000 in 2 days. I show enough trades which can do that. But I don't talk about it. I call this the galloping horse pattern. Exaggerator. Isn't that the horse that won the thing? Exaggerator, right? Preakness. Look at this. Does it look like a horse's thing? So to me, it's telling me, given what I'm seeing down here on these positive divergences, that this is going to break out over this channel or at least get to 206, 2060, and I believe that it's going to break out. Everything is cognitive bias. If you're a bear, you're going to say, no, 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 we're going to fall below here, and then we're going to fall to 1980, and then we're just going to keep on going. All I'm simply saying, we might even test those levels and go below. I'm not denying that. All I'm simply saying is that for the interim, going into the end of the month, look at this. Today was an inside day. The body of this candle is larger than that within, and the body of today's red candle is still trapped between the body of the previous candle. This is a hollow candle reversal. Remember that? Hollow candle reversal. If you had bought these lows, you'd be sitting very pretty out here. And I did call the shots. I do this hollow candle reversal on Friday. Thursday, actually, right? Thursday. So here we are, still intact, at least based on the internals. Anything can change overnight. But I still think the S&P can get to what's 2207, 2070. And God help us if we break that, then we hit this peak here where we reverse, which is 2080. And if we break that, then we have a dragon bullish pattern. Last thing I'll tell you, when patterns are being created, ladies and gentlemen, they don't raise a green flag and say, I'm creating this pattern. I'm creating a dragon bullish pattern, or I'm creating a head and shoulder, double top. It just does it. It's up to you, with my help, to figure out what those patterns are. And when you can predict those patterns within a matter of a couple of hours or days is when you make the big money. Thank you for listening. Have a great evening, and God bless you all.